This is the story of empires, but not the kind you've read about in history books. Empires of legions, emperors, and stony castles. These are empires of paper, of contracts, of ambition forged not in steel, but in profit. These are the stories of companies that grew so powerful they rivaled nations, commanded armies, and held the fate of millions in their hands. From a small British trading firm that conquered a subcontinent to a Wall Street giant whose collapse brought the world to its knees, their histories are separated by centuries, but they are bound by the same timeless tale, a story of explosive growth, unchecked power, and the catastrophic fall that always follows. This is the secret history of economic empires, and it holds a chilling warning for our own time. Our story begins in the year 1600 with a charter from Queen Elizabeth I. The British East India Company was born with a simple goal: to trade spices from the East Indies. For its first century, it was just that, a company of merchants and ships. But in the fertile lands of India, they found something more tempting than spices: power. Slowly, methodically, the company transformed. It wasn't just trading anymore. It was playing politics, pitting local princes against each other. It established its own private army, larger and better equipped than many European nations. This was no longer a company. It was a state within a state. The tipping point came in 1757 at the Battle of Plassey. With a small force, the company's commander, Robert Clive, defeated the Nawab of Bengal. From that moment on, the East India Company became the master of India. It collected taxes, administered justice, and waged war, all in the name of its shareholders. It was the ultimate expression of corporate power, an empire of profit. But such power, unchecked, inevitably corrupts. The company grew arrogant, its officials plundering unimaginable wealth while devastating famines swept the lands they controlled. The empire built on greed was beginning to rot from within. Finally, after the Great Indian Rebellion of 1857, the British Crown had enough. The company was dissolved, its territories absorbed into the British Empire. The first great corporate empire had fallen, leaving a simple lesson: when a company becomes more powerful than the state will eventually strike back. As the age of sail and conquest gave way to the age of steam and steel, a new kind of empire emerged. This one wasn't built on spices, but on a thick black liquid that would soon power the world: oil. And its emperor was a man named John D. Rockefeller. His company, Standard Oil, didn't need an army. It waged war in boardrooms and back alleys. Rockefeller was a genius of efficiency and ruthlessness. He bought out competitors, controlled railroads, and crushed anyone who stood in his way. By the 1880s, Standard Oil controlled 90% of America's oil. It was a monopoly so vast it could set the price of light for an entire nation. But as Rockefeller's wealth grew, so did public outrage. Journalists and politicians exposed the company's brutal tactics. The public saw Standard Oil not as a symbol of success, but as a threat to democracy. In 1911, the Supreme Court delivered the death blow, ordering the breakup of Standard Oil under new antitrust laws. The industrial titan was shattered, proving another timeless lesson: no empire can stand forever against the will of the people. We've journeyed from colonial conquest to industrial monopoly, but the nature of power is about to change again, becoming faster and more invisible than ever. If you find value in connecting these hidden historical dots, take 1 second to hit the subscribe button. You won't want to miss where this story goes next. The 20th century saw the rise of a new, more abstract form of power: finance. The new emperors were not merchants or industrialists, but bankers and traders. And for a moment in the late 1990s, it seemed they had finally conquered the oldest enemy of all: risk. The name of this new empire was Long-Term Capital Management, or LCTN. It was a hedge fund unlike any other, run by Wall Street's brightest minds, including 2 Nobel Prize-winning economists. They believed their complex computer models could predict the market, making them invincible. They placed enormous bets, leveraging tiny amounts of capital into positions worth over $1 trillion. For 4 years it worked flawlessly. They were hailed as geniuses. But in 1998, Russia defaulted on its debt, a scenario their models had deemed nearly impossible. The invincible fund was suddenly on the verge of collapse. The problem was, LCTM was so large, so interconnected, that its failure threatened to bring down the entire global financial system. In a secret meeting, the Federal Reserve was forced to orchestrate a massive Wall Street bailout to prevent a catastrophe. A clear warning had been fired. The new financial system was dangerously fragile. The lesson was stark. Genius is no match for greed, and complexity is often just a way to hide risk. The world had been given a glimpse of the abyss, but the lesson was not learned. Just 10 years later, the same arrogance, the same reckless risk-taking would reappear on a scale that dwarfed LCTM. The new titan was Lehman Brothers, a 158-year-old institution, a pillar of Wall Street. Lehman embraced the new frontier of finance: subprime mortgages. They bought and sold trillions of dollars in complex, toxic assets, convinced, just like LCTN, that they had tamed risk. They leveraged themselves to the hilt, gambling that the housing market would never fall. When it did, the house of cards came crashing down. This time, there was no secret bailout. On September 15, 2008, Lehman Brothers declared bankruptcy, sending a shockwave across the globe. The financial system froze, credit markets seized, the Great Recession had begun. The fall of Lehman was not an accident. It was the inevitable conclusion of a story that began centuries earlier. It was the final, devastating lesson: the debt, leverage, and the illusion of permanent growth are the seeds of our own destruction. From the East India Company to Lehman Brothers, the pattern is the same: an intoxicating rise, fueled by innovation and ambition, a period of dominance where power seems absolute and rules no longer apply, and then the fall, a painful reckoning brought on by greed, arrogance, and the fatal belief that this time it's different. Today, new giants walk the earth: tech companies that control the flow of information, shape public discourse, and possess wealth that eclipses the GDP of most nations. They are the new empires of the 21st century. And as we look at them, we must ask ourselves, have we learned anything from the ghosts of the empires that came before? Or are we destined to watch the same tragic story unfold all over again? Which modern company do you believe is the economic empire of our time? Let me know your thoughts in the comments below.